Hey everyone, welcome back. Let me ask you a question. Is the U.S. housing market finally shifting in buyers' favor, or is affordability still keeping people on the sidelines? Well, after years of red-hot sellers market during the pandemic, we're now seeing a shift. Today, sellers actually outnumber buyers by more than 500,000 across the entire US. But here's the catch. Even though it's technically a buyer's market, most buyers still can't afford to purchase. Rising mortgage rates and sky-high prices are keeping demand weak and slowed down what's already one of the most sluggish housing markets in years. So, in today's video, we're going to be breaking down a number of questions that you folks have been asking about over recent weeks and recent months. What exactly defines a buyer's market versus a seller's market? Which cities lean towards the buyer's market right now, and where sellers still hold the upper hand? And most importantly, what should you do depending upon which market that you're actually in? So, let's start off with the basics. And this question we have seen come up over and over again over the recent months. Obviously, a lot of things happening with the market, and a lot of questions. Well, what defines a buyer's market? What defines a seller's market? Well, a buyer's market happens when there are more homes for sale than buyers ready to purchase. Now, this gives the buyers the upper hand. Now, they can often negotiate rather, price reductions, get seller concessions, or even have repairs covered just to close the deal. On the other hand, a seller's market is the reverse of that. This is where there are more buyers than homes. Competition heats up. This leads to bidding wars, homes selling above asking, and sellers calling the shots in negotiations. This is just what we saw in the pandemic. Think of this as a farmer's market. If there are way too many tomatoes, the price drops because sellers need to get rid of them. If they are hardly any tomatoes, but tons of people wanting them, well, the price shoots up, it skyrockets. Housing markets follows the same principle, just with a lot more zeros at the end. So where are we right now nationally? Well, we're technically in a buyer's market. Sellers outnumber buyers by a wide margin, meaning in theory, buyers have more power. But here's the twist. Affordability is the real roadblock. Mortgage rates have climbed over the last handful of years. Now they've corrected a little bit here recently, but prices of housing has stayed high, and as a result, many buyers are simply priced out. We can see this in the numbers. So over the last 6 months, prices actually rose while demand, it dropped. And that's almost opposite of what we normally see in the busy spring and summer months. So while the label says buyer's market, the reality is that fewer buyers can actually participate. So let's get down to some of the specifics here. Where in the country do buyers have the most leverage right now? Well, the answer is the Sun Belt. And a couple weeks ago, we hinted about this. Florida and Texas dominate the list of strongest buyers markets in 2025. Miami, Florida tops the list. Sellers outnumber buyers by nearly 143%. Median price of home there, it's $563,000. Then jumping over Austin, Texas comes next at 131%. More sellers than buyers, and median home price is $442,000. Then back over to Florida, Fort Lauderdale at 128% with prices around $451,000. Now, here's why. During the pandemic, builders put up a ton of new homes across Florida and Texas, but now many of those homes are sitting unsold. Demand is dropping fast, partly due to, of course, the high prices, but also due to climate risk and soaring insurance costs, especially in Florida. So if you are a buyer in these areas, you've got more leverage than you've had in years. Take advantage of that. Now, let's go on the other side of the fence. Let's flip the script. There are still places where sellers actually hold the upper hand. Only 5 major metros qualify as sellers markets today, and most of them are in the Midwest and Northeast. Newark, New Jersey leads the way. Buyers outnumber sellers by 43%. Median home price up there is $614,000. Nassau County, New York follows with a 42% gap and prices around $728,000. And Cleveland, Ohio rounds out the list, still favoring sellers even at a much lower median price of $241,000. Why in these areas? Well, it's simple. New construction has lagged in these regions. Meanwhile, more people are moving in, drawn by the relative affordability compared to the coast. With few new homes being built in these areas, supply just can't keep up with demand, giving sellers in these areas the upper hand. So what should you do if you're buying in this market? Well, in a buyer's market, you have the leverage. Use it, negotiate for concessions, push for price reductions, and don't be afraid to ask for repairs. With fewer buyers around, sellers are going to be much more motivated to make a deal. But if you're in one of those rare sellers markets, well, be ready to act fast. Homes can move quickly and attract multiple offers, and that means coming in strong with your first offer and being realistic about your negotiations. And as for sellers, well, if you're selling in a buyer's market, it's going to be tougher. Not a big surprise. Homes today will sit on the market 40 days on average to sell, and nearly half will sit 60 days plus. So to compete, you're going to need to be priced competitively, offer flexibility, and possibly add some incentives. But if you're lucky enough to be in a seller's market, well, this is your moment to shine. Expect multiple offers, possible bid wars, and more favorable terms, like waived contingencies. Now, here's another question that we've seen come up over and over again from you folks asking, well, Alex, how do I know which market I'm in? Well, here is a quick checklist for you to keep in mind. Look at the months of supply. If it's less than 4 months, well, chances are you're in a seller's market. If there's more than 5 months, well, you're in a buyer's market. Track price trends. If prices are climbing fast, well, it's going to favor sellers. Watch mortgage rates. Higher rates slow down demand, which benefits buyers. And of course, talk to a local agent. Markets can shift drastically, not just city to city, but neighborhood to neighborhood. So here's the bottom line. Nationally, we are in a buyer's market, but affordability remains to be the biggest obstacle. The good news with all this, well, price growth is slowing. Mortgage rates have ticked down from their highs, and we've covered this over the last handful of months. We've seen some correction with the rates. Now that could bring more activity back into the housing markets in the months ahead. So if you're a serious buyer with the budget, this might be the window to act before competition heats up again. Well, that's going to be all I have here for you today with this report. If you found this video helpful, hit that like button down below. Hit subscribe so you don't miss out on any future reports that we have coming around the corner. If you happen to be in California looking to buy or sell, or just have questions on real estate in general, give me a shout. Happy to sit down with you. But friends, that's going to be all I have here for you today. I will see you in the next video.